Hello everyone, I'm Dan Geltrude and welcome back to Token Money Magnet, the only show that turns viewing time into ownership. So remember, when transferring money overseas took days and cost a fortune, those days are over. Decentralized finance, or DeFi, is rewriting the financial rulebook, sending money anywhere in seconds for pennies, not days for dollars. Flash loans now let everyday people borrow millions without collateral and execute profitable trades instantly. Who needs banks when code does it better? Singapore's DBS Bank has tokenized bonds with $10,000 minimums instead of $200,000. That's real financial inclusion. The $1 trillion locked in illiquid assets worldwide is finally being unlocked. That's not evolution, that's revolution happening right now, and you could be part of it. So to help explain these big changes in finance, I'm here with two experts who are building a decentralized future where everyone can participate. So first we have Kamlesh Nagware, co-founder of FSD Labs, TEDx speaker, and advisor to CBDC projects globally. He's bringing his expertise as Hyperledger India co-chair and one of the top blockchain influencers in India. Alongside him is Denis Petrovcic, CEO of Blocksquare and FIBREE board member, whose entrepreneurial journey has led him to creating digital platforms that make real estate investment accessible to everyone. Together, they'll show us how DeFi is democratizing wealth creation worldwide. So, Kamlesh, let's start with you. DeFi's core promise is cutting out financial gatekeepers using blockchain automation. Could you explain how smart contracts and tokenization specifically dismantle traditional intermediaries like banks in loans or brokers in real estate? And why is this shift so critical for global financial inclusion in 2025?
Yeah, so then I think this is very fundamental and basic questions about how the decentralized finance and how the smart contract and the tokenization on top of the blockchain could transform the asset tokenization or the democratizing the investments or democratizing the high value items or any asset. So if we fundamentally see, like, blockchain is about decentralized distributed ledger, is all started with Bitcoin, and a smart contract is executable software code running decentralized, automated, which automate the process of verification, automate the process of execution of the any contract agreements. And the very buzzword now is the tokenization, where you are representing any of the asset. That asset could be money, that asset could be real estate, that as any asset which has some represented any value could be represented as a token, whether in a fractionals, whether is a digital form only, and which enable the real-time settlement or issuance, transfer, redeem very efficiently in real time across the border, across the different economies, because this is the underlying characteristics of the blockchain network all there. Now how it is going to transform how the loans or how the any kind of this system works. For example, currently if you want to take a loan, you need to go through via the traditional verification and the KYC model or all the kind of what you call, let's say, different credit score and credit ratings, and get the visibility about whether you get a loan or not. And it requires all the traditional methods or traditional way to identify any whether I am a legitimate borrower or not. But using the smart contract and using tokenization, you get the like you mentioned, or the flash loans, where you can simply get a loan in terms of the tokens, and which could be programmed in a smart contract, so automatically interest, automatically the settlement happen whenever you reach on the smart contract agreement. So it's all about democratizing the investment, democratizing the assets using the smart contract and tokenization put together.
So, Denis, we've been discussing how tokenization turns real-world assets into digital tokens, making them easier to trade and manage. Now, for any investment, knowing how to get your money back is crucial. So, how does tokenization, in your experience, create more accessible exit opportunities for individual investors and realize their investment?
Well, then here, basically, when we're tokenizing an asset, what is happening is we're creating an infinitely small fraction possible for somebody to own that or co-own that asset. And if you look at that as, decreasing the barrier to access, it means that the exit can be done partially or fully to any participant, no matter the size. I think that's a crucial differentiation from how traditional markets work today, where only a set number of participants can be present at a certain moment. With tokenization, anybody can be exposed or can have exposure to a specific asset, which means demand can always kind of surpass supply, especially when you count in quality. In the end, if you have or if you hold an investment into a quality asset, into a great asset, then obviously finding an exit strategy, it's not so hard. So the due diligence process is, I think, crucial. It doesn't change with tokenization, of course, but it does create this digital element, creates the accessibility that is basically anyone with an internet connection and a phone could potentially become a participant. And I think that's the key element that we have, uncovered with tokenization. And it's only a matter of time when every asset in the world is basically represented through tokens.
Decentralized finance, or DeFi, uses blockchain technology to offer financial services without banks or middlemen. One of the best features in blockchain is smart contracts that automate lending, borrowing, and trading directly between users. DeFi grows through institutional interest and by bringing financial services to everyone. Looking ahead, advancements in scaling, cross-chain connectivity, and tokenizing real-world assets push boundaries. Ultimately, DeFi's future hinges on balancing innovation with security and smart regulation.
Amazing. So, Kamlesh, in traditional banking, a major part of deciding who gets a loan involves a careful review of a person's credit history and financial stability. Decentralized finance aims to automate many of these processes. So, considering the power of smart contracts and on-chain data, can automatic or automated DeFi lending protocols truly replace the complex credit risk assessments that banks have traditionally performed?
Yeah. So I think technically, as I'm understanding, maybe this DeFi is not going to replace the existing or traditional banking infrastructure, but I think it is going to be hybrid way where the on-chain financing or the credit scoring and the tokenization could be aligned with the existing banking and payment infrastructure. For example, you take an example of the JP Morgan, take example of the CT or HSBC. They are leveraging the tokenization, and even let's say you heard about the DBS example, how the DBS is tokenizing their assets in a fractions. So technically, you're going to have the DeFi and traditional finance to work together to streamline the liquidity or the fractional ownership using the tokenization and using the existing infrastructure, whether KYC or it is about the risk assessment model using the AI, going to play together and is going to work together about the liquidity plus the KYC model about the financial infrastructure out there is going to be work together.
Cross-chain integration allows different blockchains to communicate and transfer assets between one another. In the past, DeFi's biggest hurdle was fragmentation, with assets and liquidity trapped in separate blockchain ecosystems, limiting users' access. This technology dramatically improves capital efficiency by pooling liquidity across chains, while giving users access to multiple networks through a single interface. Leading platforms now utilize this technology for cross-chain trading from one dashboard. As these technologies mature, we're moving toward a truly borderless DeFi ecosystem, where the underlying blockchain becomes invisible to small investors.
So, Denis, the insurance industry is another huge potential sector that has a lot of liquidity locked in. Is it possible to open that liquidity through tokenization? And if yes, what could be the possible benefits to the common folks like us? Can we see our insurance premiums going down?
Maybe, I don't know. I think in the end, it always comes to risk, right? And it's the risk perception that kind of brings premiums down. So if the general market figures out a much more efficient risk modeling for insurance, I think we could see efficiencies being unlocked that we could not previously think of. I've seen or heard of pilots in the insurance industry using smart contracts already a couple of years back. I'm not sure if this had been adopted fully in a commercial sense yet, but I believe that with research we're gonna get solutions that will definitely improve how insurance companies are able to provide their services on the market, and tokenization might be one of the paths towards it. Definitely, if you combine it with advancements in AI, we can see probably a lot of inefficiencies being, removed from that transaction, and in the end benefiting the consumer.
Great. And Denis, let me follow up with you here. In tokenized peer-to-peer lending, how much control do lenders have over their investments? Can I diversify my $100 across multiple loans to reduce risk? And how does technology enable this level of precision?
Well, decentralized lending is an area that has grown quite a lot. Currently, most of these loans are being collateralized or secured with the use of crypto. For instance, you can deposit Bitcoin, or you can deposit Ether, or you can deposit some other kind of blue chip tokens or cryptos to secure your position when you borrow a stable coin, for instance. And that's instant. All you need is a wallet and you're able to secure that loan. On the other end, you can participate in these markets as a lender or as a borrower. So usually you're doing both at the same time, which is, I think, the most interesting part, because you're securing your borrow position with a collateral. And that collateral basically is your loan to the protocol. These protocols have locked in huge amounts of value nowadays. We're talking in the billions. And we've seen flash loans yielding quite interesting returns, but it's a very competitive market, and you can think of various hackers, let's say, looking at ways of how to arbitrage the markets in a profitable way using flash loans.
And Denis, and again to you, we're seeing a lot of new digital forms of money emerge, and central banks are now exploring their own versions called CBDCs. Considering this, how does CBDCs connect traditional banking with the new world of programmable money?
CBDCs are definitely an interesting topic, an interesting area, and it's a way for central banks to explore the use of tokenization basically in their own way.
Okay, so Kamlesh, over to you. There's something called TradeFi bridges that open up the possibility of currency owners to also participate in the Web3 finance and banking economy. How does this work?
So technically, currently, any traditional finances work on the existing their financial network or financial ecosystem where traditional verification, traditional risk rating, traditional score about the credit, and then you are using the traditional regulatory compliance and then providing the any kind of financial services, whether it's a insurance, whether it's a loan, and kind of financing. But now using the decentralized financing, you are using the on-chain data, you are using the smart contract where you could define your business rules and business terms and condition, and that is executed automatically. And you could use the even on-chain transaction data to verify the authenticity or verify the credit history of the particular buyer.
So Denis, over to you. We've seen how tokenization can bring liquidity and efficiency to various assets. Now let's consider two complex areas: mortgages and distressed assets. So can these traditionally illiquid assets be effectively tokenized? And if so, how would this process benefit both the borrower seeking financing and the lender providing it?
Generally, I think any asset in the end can be tokenized and will be tokenized. The nuances of how you tokenize a specific asset, you asked about mortgages and distressed assets, it comes on how it's structured in the back, right? And regulation here is, or should be here to help us be able to bring all those assets on chain in a safe manner for every investor. When it comes to distressed assets, the tokenization process is basically just the same as with any other asset in the end. The question is, what is the risk behind it? And I think what the market really needs is frameworks that are able to inform investors on the risk parameters behind a specific asset. And this is something that with on-chain data, it's possible to really programmatically create solutions that can kind of monitor the risk metrics and risk parameters of each tokenized asset in real time.
All right, and now we have some questions from our audience. So first to you, Denis. Tokenization is making it sound like anyone can jump into art or real estate investing. But if we're cutting out the usual checks and balances, how do we stop regular folks from getting burned by scams?
That's a great question, actually, because I believe that this kind of episodes then bring distrust to the market. And what happens is that less and less people get involved. And, just a few bad actors can really kind of potentially disrupt or basically ruin the possibilities of the good people working and building in the sector. I believe that it's important to really do your own research. That's a phrase that you hear a lot of times when you start investing in Web3. So do your own research, understand how the real world asset is actually being transferred on chain. What's the worst case scenario? Once you figure out the worst case scenario for you, then you can figure out the risk. And then when you figure out the risk, you can figure out the amount that you would like to invest.
So Kamlesh, over to you. DeFi is doing all the lending and finance stuff automatically. But what if the computer messes up? If a smart contract glitches or your money gets stuck, who's the go-to person to fix it?
Yeah, I think that is very challenging question to everyone, because when any smart contract gets glitches, right? Because it's a self-executing, there is nobody control, it's a decentralized. So how you fix those kind of issues? So I think first of all, you need to do the proper due diligence or the security audit or the audit of the particular program, and then you should deploy it. But still, if some issues, then maybe you could upgrade the program with the latest changes and then redeploy it. Or there are Discord and the various community out there. You could approach to those communities and take the help, or some kind of bug bounty program you could run. But I think whatever executed in the blockchain, it can't be revoked. But at least you could avoid the future action out of those mishaps.
So, Denis, we're tokenizing everything, and it's all happening on these decentralized exchanges. But how do we make sure it's not just a playground for the rich and tech savvy? How do we keep things fair and open for everyone else?
Yeah, I believe that there's definitely a barrier to enter this market. People do need to get some basic knowledge of how things work. How does a wallet work? First of all, how does securing self-custody is a new concept to many people. And understanding how you can secure your funds in the proper way is the number one. It's kind of the Web3 101 lesson that everybody needs to go through. But in the end, it's just like, being safe on the internet. You need to understand that there are bad actors around, and you should not be naive to kind of fall for anyone messaging you there. And then take it slow. Learn first, and then do bigger moves later.
Thank you for that insight. So, what most people call complex, we call opportunity. Today's episode wasn't just a show, it was your financial masterclass. The future isn't coming, it's already here, and you're holding the key. So thank you to our expert guests for providing such great information. Remember, this isn't just theory. This is your revolution. I'm Dan Geltrude, and this is the world of Token Money Magnet. We don't just watch finance change, we change it. So until next time, keep tokenizing and keep innovating.